Hey guys, welcome back to the channel. In this video, I'm going to be going over how much dividend income I actually made for the months of November, October, and September. All right, so it's been quite a while since I've done a kind of a portfolio update or a dividend update. So I'm going to just show you real quickly how much I made, and then kind of go over the portfolio. All right, so without further ado, let's get into it, guys. Okay, so this is the portfolio as it is today. Currently, I'm sitting at $214,000 in the portfolio. I have about $1,400 sitting in cash. Let's see, a money weighted return of 11.8%, a market gain of negative $403, and dividends earned. And again, this is dividend earned over pretty much the lifetime of this portfolio. I've made $16,855. All right, so what I really want to focus on is going to be the real estate investment income trusts. So let's take a look at those. So here we can actually see a kind of a little different of a story. So I have a money weighted return of 10.75%, and the value of the portfolio is $199,000, close to $200,000. So it's been fluctuating quite a bit these last couple of months because of interest rates. And especially, we have a new president, and his plan for what's to come kind of, has a lot of institutions kind of on edge, especially those that offer, mortgages and loan out money. So interest rates have actually been climbing, even though the Federal Reserve has been lowering interest rates. It still has, weirdly and oddly enough, spooked the market, and interest rates for mortgages have actually went up. So that's what has been putting a lot of downward pressure on real estate. But I don't know, I don't have a crystal ball of how this is going to turn out, especially in 2025. But, who knows? We might still see the same thing where the interest rates are still pretty high, but it seems like people are still buying properties, people are still buying homes. So, there was an article I saw out there saying that basically people are getting used to it, getting used to a high interest rate. So maybe that's the case. But let's get into the dividends. Okay, so let me move my head over here. So I'm going to, it's going to be kind of hard to show you guys. Let's see the activities. Let's go here. Let's do date range. Let's go back. We'll start in October, and then we'll end it today, or December 1st. All right, so these are the holdings that basically paid out my dividends. So you have Main Street, Triple N, Triple N REIT, ADC. So if you guys want, you can pause right here and kind of just see what the companies are that paid out. And even here, you guys can see all the dividend income I've been getting. And this has all been steadily growing, right? This has all been steadily growing, which is very, very nice. So let's take it to holdings, go to dividend income. So for November, I didn't get much dividend income. I only got $109. But for October, I got $1,243. So that's $1,243. That was really, really nice. That was a great month. And then for September, I got $996. So overall, over the last 2 months, 3 months, this is I've probably raked in about, let's see, 21, 22, almost $2,300, right? $2,300 is pretty cool. And again, I'm averaging about $782 a month. This was $750-ish last time, in the previous video. And for the year, I'm making about $8,454. Or I'm sorry, the total income would be $9,388 for the year. All right, so again, this portfolio is going up. I'm very happy with the trajectory and the direction it's going. I can't be, ecstatic enough. Even though the entire portfolio is seeing a lot of, I want to say, volatility, because of, interest rates and because of uncertainty in the markets for next year. I want to say, even though this portfolio is going to probably see kind of a bumpy ride, I'm going to be able to weather it. I'm not worried one bit. Even if there is, a mild recession to probably a little more of a deeper recession, I will not be worried about this portfolio. If anything, if the share prices go down, it's going to present an even bigger buying opportunity. So I would love to take advantage of cheaper shares. Let's take a look at the equity REITs real quick. So, I'll put a link down below in the description for you guys to this M1 portfolio so you guys can see it yourself. So you can see the holdings yourself. To go over this, all these different holdings will probably take about 30 minutes. And I don't want to waste your guys' time. But, I invest in cell towers, apartments, industrial REITs, storage, triple net lease, manufactured housing, strip centers, biotech, casino and gambling. Vici is the company that I'm investing in there. Single family homes and some cannabis REITs. So cell towers, unfortunately, they were doing well up until, they were not doing well. So like right around here in September, my cell towers recovered completely, which was really nice. And then just after all of that, it just hasn't really been doing so well. And again, it's because of these interest rates, headwinds, and things like that. So one interesting article I did find was this, and it was rate decreases as of, it would be yesterday, December 3rd. But it looks like rates are starting to come down a bit. But again, nothing meaningful. It's still, the market is still pretty spooked about kind of Donald Trump's direction as president for the economy starting next year when he takes office. And again, this is all speculation. A lot of, institutions, things like that, big banks, they treat mortgages just like they would any other investment, right? They're going to take a lot of macro factors into account, monetary policies, the direction of the economy, and that is what's influencing mortgage rates. So I really think next year we'll probably have a better picture, and a better picture could be a little worse. Maybe interest rates stay above 6 and 6.5%, despite the federal funds rate, going down. And that's the interest rate from the Federal Reserve. Even though that is going down, interest rates, I think, will still be pretty elevated, right? Because there's still a lot of risk and uncertainty in the economy, especially with, their data is there that we may already be in a recession, right? We may already be in a recession. It's just the government has not announced that we are in a recession officially. So, the data points that are out there, CPI, core inflation, jobs reports, all that other stuff, it is starting to show that, we might already be in a recession. So who knows, right? Certainly not me. I'm not an economist. I'm just some dude on YouTube that's, just investing. All right. So that's that. This is the crappy part about investing. And, I just want to briefly touch on it. Portfolios, they're going to go up and down, right? They're going to go up and down. And yeah, there could be better ways to make money, or better investment ideas. There could be better hype stocks or even better hype cryptos, right? But again, when you're investing, you have to have a plan. You have to have a solid strategy. And I'm investing into these real estate companies because I have a long-term plan for them, right? I have like a 10 or 15, even a 20-year lens whenever I invest into these companies. There is one position I'm looking at opening, and that's going to be probably for another video. I'm thinking about opening another position once I get a little more cash, but it'll be in the industrial REITs. That company will be Rexford Industrial, ticker REXR. It's starting to get cheap enough where I think I want to enter it, so we'll see how that pans out. But again, I'm investing for the long term. I'm investing to build wealth. I'm investing specifically in REITs because I want passive income. Now, this strategy may not work for you. It may not work for others. It may work for some, right? For me, it's what I know, like, and love. All right. I know real estate as an asset class, and that is what I'm betting all my money on, right? Is real estate. So I believe that probably mid 2025 to late 2025, this portfolio will probably jump up substantially because interest rates will come down. You know, I was really hoping, and that's kind of a bad word to put it because you shouldn't hope when you invest, but I was really hoping that with the Federal Reserve lowering interest rates, that, you know, mortgage interest rates would follow, but they didn't. All right. But that doesn't mean that's not part of the strategy either, right? You shouldn't invest in like if you're betting on interest rates, that's not a strategy. You should be investing in good quality companies, and that's exactly what I'm doing here. I'm investing in good quality REITs, all right, with good management teams, excellent balance sheets, moderately leveraged, which means that they're not taking on excessive debt, and you know, I'm trying to stay diversified. That's why, I mean, if you look at this portfolio, I mean, I have a cannabis REIT in there. Like, it's kind of crazy. I have a cannabis REIT in here. You know, and the same thing goes for everything. Like, I have cell towers, apartments, multifamily, industrial. Like, I have a ton of stuff. So that's kind of my thoughts on this portfolio, and kind of sums up the portfolio update. So we'll see how the rest of, you know, 2025, well, the rest of 2024 goes. We still have a month to go, and then we'll see how we look in 2025. So I'm pretty excited, and I'm going to just keep dollar cost averaging into my portfolio, and, you know, we'll just see how the rest goes. So that'll be it for this video, guys. Appreciate you hanging in there, and I'll see you guys in the next video.